Hi, good morning, everyone. Thank you so much for joining us for today's Sage Fixed Assets webinar on the hidden cost of fixed asset management and how to fix it. We're very excited to have you with us. Now, before we begin, just a few housekeeping notes. All attendees are on mute to minimize any background noise. We'll have time for Q&A at the end of today's session, but please, in the meantime, feel free to submit your questions at any time using the questions panel on your GoToWebinar dashboard. And our presenter today and host, Angela Bolton, will answer those. And don't worry if we don't get to any of those by the end of the call, because we'll definitely follow up with you. Now, on to the important stuff. I'm so pleased to introduce today's speaker, Angela Bolton. Angela is a fixed assets expert. Boy, is she ever. And she happens to be our product manager here at Sage Fixed Assets as well, our senior product manager. She has years of experience helping finance and tax teams turn fixed assets compliance into strategic advantage. And in today's session, she's going to uncover the real financial risks of separating your GAAP and tax books and explain the key depreciation rules that you don't want to overlook. You really don't. And she'll help you understand why. And then she'll share some practical ways to reduce audit exposure and unlock ROI as well. So without further ado, let's get started. Angie, over to you.
Thank you so much, Tani, and thank you everybody for joining us today on the hidden cost of fixed asset management and showing some tips on how we can fix it, how we can be more mindful as we move along this process within fixed assets. So I'll get started. And just right off the bat, why does this really matter? Fixed assets. You know, I've been doing this show for 27 years, and I still get asked, you know, why is fixed assets such a big deal? And I kind of get stumped in the fact that I'm not sure why I get asked that all the time. Because fixed assets, again, are the backbone of your balance sheet. And when we talk about that and we talk about processes, procedures, how people are utilizing them, reporting on them, tracking them, managing them, you know, most people don't really do see the big picture. So today I want everyone to start seeing the big picture and where we can, you know, fill in the gaps, see what's missing, and how we can make that streamlined so that we're not missing that information and we all are on the same page. So what does mismanagement really look like? Well, it starts off by inaccurate records and unreconciled against other books. What does that mean? Inaccurate records meaning, do we know what's on our subledger? How many subledgers do we have? If we have multi-locations, you know, where are all these subledger lists at? Who's taking care of these? Who's managing them? And there's a lot of turnover when we're managing this. I've seen in my lifetime of fixed asset management, of consulting and being a user as well, is that what we see quite often is the turnover in accounting. And we also see the turnover in the fixed asset accounting aspect across multi-departments, which we'll get into today too. And unreconciled against other books, meaning against your tax book, your state book, a budget book, you know, any other books you might want to keep at E&P and those sort of things. Are they internalized? Are they externalized? Are they being kept by a CPA? We're not reconciling them against our financial internal list, those sort of things. And that mismanagement gets pretty hairy. We also talk about ghost assets. This term is highly used everywhere, has been for, well, as far as I know. But ghost assets and assets that are in use are really, we're talking about, are we using these assets out in the facilities, out in our business, out in our office space, but are we recording those in our subledger? Quite oftentimes, I've noticed and found myself during inventories with clients is that, you know, when we go to do an inventory, we notice that a lot of assets have been disposed of, but have not been disposed of in the subledger. So now we have, you know, that's what we call a ghost asset. But we also have the opposite side. So sometimes too, we see where assets are on the subledger, but they're actually not in the field, or they're in the field, but not in the subledger. And also sometimes too, we see the assets that are disposed of are actually still in use. And that happens quite often as well. So that also goes back to mismanagement. Unclaimed depreciation and adjustments. We see this quite often too with mismanagement of fixed assets, to where, if we're not keeping track of our subledgers and we're not reconciling against all the books, and we're not taking note of all the disposed assets or assets in use and those ghost assets, right? Then what we see quite oftentimes is unclaimed depreciation, meaning that when we do start to reconcile against our tax books, our GAAP books, what's in the field, what's in CIP as well before we even bring it into place of service, is that we're unclaiming depreciation. Sometimes we're taking too much depreciation, but oftentimes we're not taking enough because we don't have enough visibility in our subledger. We're not managing it correctly, and we're not seeing where these pitfalls lie. Okay. And adjustments play in this role too, quite often, because a lot of times with fixed assets, I've seen so much different things happen with fixed assets over the years, that we're also seeing where payments, like progress payments, either they're in CIP or they've been placed in service out of CIP, but some of their payment schedules are still stuck in CIP, and we're not taking those adjustments. Or we are taking those adjustments, but we're only taking them in the GAAP side, right? We're only taking them from the finance perspective, and when they're not always being reiterated or updated in the tax books, estate book, or any other book that we're keeping in parallel with our GAAP subledger. Okay. So that happens quite often, especially in high volume situations. And then missed retirements and sales. So a lot of times too, which is unfortunate, when reviewing subledger data, I'll see that some assets have been sold through acquisition or through a disposal of some sort, sale, and not necessarily do we not see it being disposed of, but what we're not seeing are the cash proceeds, and the cash proceeds being, allocated correctly, or they're not being depreciated correctly, or they're just simply not being recorded at all. And that's a problem too, from so many different perspectives. So when we talk about hidden costs, we have some serious financial impacts with that. When we're looking for hidden costs within fixed assets, when we're not managing them correctly, and then we start to look at it from a higher perspective, and we go in with some more policies and processes wrapped around it, we start to see the financial impact that we have across the board with mismanagement. Okay, we often see overstated balance sheets, insurance overpayments. We also see missed tax savings across the board. And along with that, we have compliance penalties. And what kind of penalties are that I see quite often with this financial impact are for property tax purposes. Specifically, if we have multi-locations within our organization and our assets are spread across different boundaries and borders. And what we're seeing is that when it's mismanaged, and we're not keeping track of the movement of these assets, or the payments, or if we've had a purchase price allocation through an M&A, or a fair market value restudy, or an impairment, we're not keeping track of those original costs either in the same place. Then what happens with that is that we often find compliance penalties, because we start getting, state audits, property tax audits, those sort of things, where we're also getting penalties because we can't file on time, right? Or we don't have the proper information. And when they start to dig in and get through an audit process, then we start seeing those penalties. So that's a real problem. We also start to see operational inefficiencies. And what does that mean? That means we waste time hunting for assets when we could have had it all in one place, meaning we could report on it quick. If we get a request from someone in a different department that needs information on these assets, we take way too much time looking for them. If we need to look for an asset because of maintenance or to replace it, and we don't know where it's at because we haven't been keeping track of it in an automated fashion, or in an inventory throughout every year or 3 years, or whatever that time frame looks like, which highly depends on your volume and locations. But we take too much time looking for those assets, and what happens with that is that we end up with inaccurate asset lifecycle planning. We can't budget properly. We have inefficient maintenance scheduling. So we can't really see and plan out our capital expenditures throughout the next year, 4 years, 5 years, and so forth into the future. And that also has some operational efficiencies, but then it goes right back to the financial impact that we see. And that all leads to audit and compliance risks, right? So when we're not managing these properly, we don't have a system in place that allows us to see everything, allows us to capture that asset information immediately, and we can really say with so much confidence that our subledger is so accurate across the board, what happens is we have audit and compliance risk holes. And that could be anything from SOX compliant issues, if that pertains to you, GAAP issues, IFRS misalignments, if you also have foreign entities that you're, reconciling and bringing back into the bottom line and into your books. And what that shows is weak internal controls. And anytime we have weak internal controls, we're open for risk, which then goes back to what we said earlier about inefficiencies and financial impact on the penalties as well. And extra costs out the door that we could have eliminated or mitigated should we have a proper management in place. Okay. And the next thing that we see in hidden costs are strategic blind spots. And what that really means is that we're not accurately forecasting our CapEx. We're making poor or ROI decisions on our capital investments and, which way we want to go and how to manage it. We're also goes to asset utilization misunderstandings. We're not perhaps sure how we're using our asset utilization. If we're in manufacturing and we have a large machinery and equipment on the floor and we don't know what the utilization is of that, that also plays back into the fixed asset strategic in forecasting. If we don't know about, let's say, critical spares is a key term that we use in machinery equipment and fixed asset world, right? The critical spares meaning if we have this machinery equipment and it produces our widget, whatever that is, if that machine goes down, right, for any amount of time for maintenance, and we don't have a critical spare part that is necessary for that particular machine to keep working, then what does that look like as far as an impact, right? How does that impact us? But how does that impact not just our regular forecasting and our budget for our business to run, but that also really strategically impacts also our CapEx forecasting? Because now what we have to do is we have to stop what we're doing. We have to find that cost. And if we don't have that critical spare, then we also have to go out and try and find it. And sometimes that takes months and we're down. So it really does, all play into the same part as far as these hidden costs concerned. If we mismanage all of our fixed assets on every scope and every level of detail of their life cycle, then we're really missing out and we're really ending up costing us way more than a system could ever do. Okay. And then we go down to the hidden cost by department. And by department, I always use this metaphor of a spider, right? So the body of the spider is fixed assets, but each leg represents a completely different department that still, locks in to the body of a fixed asset, right? So we have finance, we have operations, IT, risk, compliance, and audit. We have FP&A, we have tax departments. We also have, it spills off to treasury sometimes for, property tax and insurance valuations. And then we also have M&A, right? So M&A is also looking at our fixed asset spreadsheets and systems to identify, what our assets are so that we can budget those for M&A as well. Okay, so it all comes back to each other. And then finally, emotional and cultural costs. And people sometimes are like, what does this have to do with anything? And what I say is that it plays a huge impact, because when your systems are broken and your policies and your procedures are outdated or not in line with your business today, then so is your trust, and so is the trust within your culture. So is the trust within your employees, your workers, and so is the trust within your budget. Right? So what are the root causes? What are the things that really impact what we just talked about? And one of the biggest things I see is lack of centralized systems. And that doesn't really mean like, Angie, I only have one location. That's great. But within your location, are you still centralizing things? If you have different departments that we just talked about, right? Go back to the spider analogy. If we have all those different legs and we still have just one location, not multi, are we still centralized in our data, or are we still disparate? Are we still separate? So it doesn't matter if you're multi-location or if you're one location but multi-departments, we still want to centralize everything, because once we centralize it, then we also have more open communication and we can all see the value. Okay. Siloed departments. This gets back to what I was talking about earlier about different departments. Oftentimes I see in 27 years of consulting, even being a user in a large multi-location, global company, I saw this quite often, all the time actually, where we have siloed departments. Each department, tax, finance, FP&A, audit, external teams, treasury, everybody who touches fixed assets, which everybody does, IT, facilities, right? Maintenance departments. They're all using separate things. They're all using what I like to say, quote unquote, templates, right? Well, a spreadsheet is not really a template. When you start using systems that are integrated, centralized, all of a sudden then the next item is that we start seeing standardization within these siloed departments and within the disparate systems. When we see standardization, now all of a sudden we're all looking at the same stuff. Training is lower. Processes and procedures are more solidified because now we're all looking at the same thing. We're all using the same reports. We don't have like a million reports. I can't tell you how often I'll be reviewing someone's fixed asset data, and then even if they're in a system too, especially, and they'll have a million different reports because they'll have different users, and each user is creating different reports of the same data. And I find that intriguing, but also scary and a waste of time, quite frankly, because there shouldn't be 50 reports to report on the same data. It should really all come down to 5 different reports. And sure, everyone wants to see something different, but that's where you could do summary or details. But when you start standardizing things, even in an automated solution, start standardizing those reports based on, policies and procedures internally, everything is much smoother and everything is much quicker, right? Much quicker. And all this leads to spreadsheet dependency, right? Everyone is so dependent on spreadsheets, and I get it. I've been in this business for 27 years, so you could probably do the math because we're all accountants here and figure out how old I am in a range, right? And so that generation, I get it. Spreadsheets are like beautiful, and some people you cannot pry away from lock and key. They are locked into their spreadsheets, and I get that. But what they are not, and they're not security, they're not secure, they are error prone. Every single time I get a spreadsheet for whatever it is, no matter how much data is on it or not, 100% of the time there are errors, right? So keep that in mind. And on top of that, they are not reports. Spreadsheets are not a report engine. So we need to step away from that and start looking at it, right, in a different perspective. And we start talking about AI and how AI is coming in as a partner for us, right? AI is a partner for us to move through these things a little faster so that we don't have to spend all this time on it. So we start looking at from that perspective, right? We're just seeing automation. So we need to start breaking away from these spreadsheet dependencies and automate as much as possible. And what this all leads to is a very poor audit trail, because when an auditor comes knocking at your door, which I'm sure you know, either internal or external, it doesn't matter, there is a checkbox, and a checkbox of a list of items. And most of the time, those checkboxes, they're looking at and reviewing the manual processes. They only look at the automated processes very quickly just to demonstrate that the system is still okay. And so once that is cleared going forward, the only thing that they're really, really looking at for the fine-tooth comb is those manual processes, those spreadsheets, calculations, and formulas. So the more that we can remove that from the equation, the better everything is going to be. So when we talk about all of these things in mismanagement, what are we really getting at? What are the bones, right? What is the, how do we get to fix it? it's really through an automated system that handles the pure full life cycle, right? The full life cycle of planning out your fixed assets. So before it's construction in progress, before they become an asset, right? And sometimes we don't go through construction in progress. Sometimes we just buy an asset and we place it in service, like computer equipment, right? No big deal. But sometimes for machinery equipment, a building, a leasehold, a large project, remodel, those sort of things go through CIP. So we need that aspect. And then when that asset becomes in service, we need the full movement of that, where we're removing, right? We're removing the manual process and we're putting automation. So again, we're eliminating that audit issue, right? So, and then the next life cycle of that is the ability to track all the activities and record those activities in a standard centralized way, which means any adjustments within all our books. That's why it's important to keep all your books in one place. Think of a true life cycle automated integrated system as your one source of record for your entire spider, right? Where we can all access that information and all the reports are there to standardize. And then that is like how we fix it. Okay. So then once we can track all the activities across all these books, the next clear life cycle approach is to track these assets. Where are they? Where are they located? This assists us in property tax. This assists us in insurance, right? Premiums and costs, which are getting very, very strict these days. And that industry itself is a huge shift right now. And it's just going to be more and more, as it always is, but it's shifting to be more complex. So the more that we can get on top of managing our fixed assets more effectively and efficiently, the better off we are when that keeps, coming out of the door as being more strict, more stringent, and different reporting requirements. And then the maintenance of these assets, right? Again, from what we were talking about before, right? Where we need to know what the maintenance schedules look like so that we're not out of production. We know that our budget is correct, our forecasting is right, and that we know when we need to replace assets and we don't. And when we do maintenance schedules and we in accounting know that these maintenance schedules are happening and we have visibility to these maintenance schedules, the biggest bonus of that is that now we can budget better. We know when we need to replace an asset, but furthermore, we can extend the life of the asset, which is also great for tax purposes. Okay. And then of course, depreciation and reporting. And then of course, we say cradle to grave being disposal or sale. Okay. So with Sage Fixed Assets, we have the CIP construction in progress module. It seamlessly integrates into the depreciation. What does that mean, Angie? That means that once an asset is placed into service, you could click a button and send it directly to depreciation. When you do that, it also tracks the project number or code that you gave it to that asset. So now all of a sudden we're automating the reconciliation as well. Right? So we're closing the loop on that. And then if we use the tracking that's also completely integrated and shares the same database, then when we start locating that asset, tracking it, we can also reconcile that back to the CIP. So it's one big, huge life cycle, right? Is what we're talking about. So CIP is amazing. Could talk about CIP for days. It's one of my favorite things. In one of my lifetimes, I had to track over 2,000 projects at once. And without an automated CIP, I probably wouldn't be here today. I probably would have died of a heart attack. So CIP is extremely important because what it does is not only does it track the costs and the budget, but the timing aspect. Are we on time? Are we on schedule? Do we need to extend it? What vendor is pushing us behind? What vendor is all of a sudden starting to cost us more? Because now when we use an automated CIP, we start to see trending. We can't always see that in a spreadsheet, right? We can also see when we use an automated system that's integrated with depreciation. We can also see when we forgot to send assets over, right? We can see when we're overspent. We can start putting together consolidated reporting, which we cannot do in a spreadsheet very easily, if at all. We can roll all this information up. We can start automating our reconciliations between CIP and depreciation, which is also an internal and external and audit and SOX audit. Okay, those are the things they look for. Okay, and then all of a sudden too, everything's automated, and it plays a role of communication for all the people that are part of that project can also have communication. I often say this in my seminars, is that people often forget that an integrated system also works as a communication device. People see it as a software, but I also see it as a tool for communication because we're all looking at the same thing. That's why we centralize, we standardize, we set policies in place, and we're all looking at the same thing. Next is depreciation, right? The golden nugget. Now, every software, every ERP has a depreciation engine, right? They do. The difference is that there is all straight line. Straight line is easy, super easy, simple math, right? That's why the vast majority of companies, farm out their tax depreciation. But if you have a sophisticated, full marketed, fully capable integrated fixed asset management system with tax being the central component, all of a sudden now the ROI is there, the mismanagement is gone, the audit is there, because with the Sage fixed assets depreciation in particular, it was born out of tax depreciation. It was born from tax professionals. That's why if you've ever seen the software, the tax book is first. It's been around for 30 to 40 plus years. I've been around with it since 1998, and by far still, it is the best for tax depreciation. And I don't mean tax depreciation as you can customize your own tax methods or you can use DB. That is not a tax depreciation system. Okay. It has to have built-in makers formulas, the actual rules, so that you as a finance person, when you key in assets, you don't have to know tax. If the system is built to show you and baby step you and hold your hand through that process, then there is no reason why you shouldn't be putting all of your eggs in one basket, meaning using your assets for all depreciation books in one central location. Okay, then all the previous things we talked about, right, of mismanagement are now taken care of. Those risks, those holes are now closed. Okay. These have tax forms, they have things for bonus depreciation, switches to turn it on, off, what percentage of bonus you want on or off on a global scale. Very simple, very easy to use, and everything is one place. Again, everything is in one place. And then the other piece, the tracking and maintenance, the biggest takeaway for this particular product that I love, and I have so many different colleagues in the industry that specifically do fixed asset tracking. Like they'll come in, they'll barcode your assets, they'll reconcile them and give you a clean list, right? But those particular companies use the Sage fixed asset tracking specifically because of its reconciliation engine. It is phenomenal. What do I mean by that? If I go out and I do my own inventory and I come back and I don't have an automated solution with a reconciliation engine, I myself am reconciling this data by myself, spreadsheet to spreadsheet with VLOOKUPs. Again, we're back to that spreadsheet codependency, right? And we're always going to make mistakes. And that is where it takes a long time. So it's very fast, honestly, it's very fast to go and inventory your assets. The part that takes the time, the longest time, and I tell all my customers this, is the reconciliation, unless you have a system that automates that. Okay, that is the key. So the fix, let's clarify these fixes, right? There's 3 steps. Clean your data. Before you start, so let's back up. So today we listened, Angie had a lot of really good information, tips for us. I love it. I'm gonna go back to the desk. What is the first thing I do? You clean your data, regardless if you're in a spreadsheet thinking about coming to an automated solution or you're already in an automated solution, but it's had turnover in users, it's had a lot of volume, you can't seriously sit in your space and awareness and say, ooh, I'm so confident this is so clean. Then what do? I clean my data. You have to clean your data. What does that mean? Go do an inventory, reconcile against your tax books, reconcile against your property tax, look at your insurance reports, all these things. Pretend that you're the auditor, put your hat on and look at these things to see what the opportunities are. What can I correct? Where do I need to go with my data? Clean your data, because regardless of what you choose, dirty data in is dirty data out, right? It's not the system, it's the data. So clean your data. Second, centralize your process. Go back to the drawing board. Look at your process. Do you have processes, first of all? Do you have a policy, first of all? If you have those things, when was the last time you looked at them? Have we touched them in years? Is it what we started when we first started our business? Have we ever revisited them? What has changed internally that we have not updated in our policy or our process? What could we do better that is not currently in our process or policy? Those are the things. And look at it from a holistic point of the full life cycle workflow, right? When you start looking at that, you'll start to see where the holes are, and then you'll start to plug them in. Number 3 is building those controls. When you look holistically at the life cycle, you see those holes, then that's where we start building those controls. What can we do to measure what we're managing? What can we do to clean up going forward and use this discipline that we now are armed with to keep it managed correctly? What tools do we need to put in place? What reports are we all agreeing on? All these things play a role. And I'm not just talking about sitting with your finance team or your accounting team. I'm talking about bringing everyone in. Everyone's a part of the puzzle. Everyone's a part of the spider. Bring all those legs together at a table and all decide together. And oftentimes I see that happening so much. I'll tell you this one story because we have time. This was always so interesting to me. I was helping a very large restaurant chain, right? And we were implementing CIP and the full life cycle of CIP, depreciation, and tracking. And when we were reconciling the data, we were cleaning the data, we were doing the first thing we needed to do was clean the data, right? When I wanted to clean the data between the tax department and finance and maintenance and facilities, they also had a say. When we weren't in the same room at the same table, and there was a question about an irreconcilable difference between tax and internal and how to fix that. And this was large volume restaurants, right? Multi-locations across all states, very large. And one called me and said, I don't know what to do here. What do you think? And I said, why don't you just talk to so-and-so in the tax department? And they go, oh, I don't know. I said, well, literally their office door is right next door to yours. And they're there because they just pinged me. Why don't you get up, go to the office and ask for yourself? So please include everybody. Everyone's part of the party. Everyone's part of the fixed asset party, right? So those are some things, those are the top three key steps to get started. What does a fixed asset management look like, a good one look like? What does it look like to us, right? It's a centralized system. It's cross-functional collaboration, right? We're all unified on a platform that serves as a single source of record for everybody, right? One single source of truth across the full life cycle holistically, right? Cross-functional collaboration too with every different department. We're also looking at how do we integrate this with our ERP, our procurement, our leasing systems for fixed assets. What are we doing to do that too? Are we tracking every asset from acquisition to disposal? How are we tracking that? And when we put all that together and we know and we have the tools in place and the policies and controls, then we can literally with confidence say, we look great, right? This looks great. Everything is awesome. Okay. Regular audits, not just external. Don't wait for that. That's like waiting in fear, right? We want to be proactive. We want to look at this holistically. We want to sit with these steps that we've learned today and try to look at, okay, Angie said we should start cleaning our data. Let's pretend we're auditors and put our auditor hat on and start looking at this holistically. Where do we need to start? And that's when you start having real-time visibility. When that's what looks really great. Is again, it goes back to my earlier saying of it's a communication tool. It's not just an integrated automated solution. It becomes a communication tool where we're all having the same information. We're all looking at the same information and we're all entering in the same information. And then what happens is we have this culture shift, and change is good. I also know just generationally too, especially if your business has been going forever. Like I've seen some manufacturing facilities that have been going for 40, 50, 60 years. And a lot of those people have been there for 20, 30, 40 years. And sometimes they don't like change, but don't fear change. Fearing change is ridiculous, right? Because change oftentimes helps us individually as an employee, right? As a partner. When we don't fear change and we allow change to come into our lives, we see things so much clearer. We have more free time. So, and then what happens there is the culture shifts. We're much more happier. We're working as a team. Everything is just better, right? So not only is our data better, but we're feeling happy and we're feeling good. And that's what is really important. So clarity isn't just about clean data. It's about creating an ecosystem where your assets tell the truth, your teams trust the numbers back to the trust, and your decisions move the business forward, clean and precise. That is my presentation today. Do anyone have any questions, please put them in the chat. If not, I'd love to give some time back today too to everybody. But again, I appreciate you being here today and learning through this. This will be recorded. It will also be available out on YouTube once it is. I see one question. I don't see any questions today. Anybody have any questions? No? Okay. Well, if you find that you have questions later, you can also reach out to me, or your sales rep, or connect with the community on the community hub if you're a customer. Sage University, there's lots of different resources to come back to. If you want to reach out to me personally for any questions or anything I said or clarification, you can always reach out to me. Again, Angela Bolton, and my email is angela.bolton@sage.com. Again, angela.bolton@sage.com. And I would love to take your questions and get back to you. Other than that, thank you so much for your time today. I hope that you found this very helpful, very useful, and go clean some data. Thank you.